Greetings, Dr. Jeffrey Scott here, and this is my Market MRI Pro update for May 13th, 2025. Another good day for the bulls, at least if you didn't own any United Healthcare, but why would anybody want to own that after it's fallen? Title this one, NVDA leads markets higher as Middle East is buying chips. Again, my name is Jeffrey Scott. Lots of ways to interact with me. Email, my old email, hgsidoc@gmail.com, I still respond to. MarketMRIPro@gmail.com is my current preferred. And even better, join my Google group at Top Down Trader. No cost, no solicitation, just where I post these things first and where I put things in that I don't put on YouTube. As always, this is for education purposes only. Anything I talk about should be in the spirit of education, not investment advice. The intent of the video is to demonstrate the tools of top-down analysis, how I apply them. Trading involves risk. You alone are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned in this report. Trading stocks and options should be considered risky and you should consult with your financial advisor before making trades. And I have tools in multiple platforms, but am an independent trader. There is a big meeting coming up. It's in Orange County, June 6th through 8th. I have an awesome cast of professional and great traders to present to us. It's at the Resident Inn and Suites, Tustin, Orange County. It's $400 for 3 days of education. It is a low budget, high value meeting. Greg Mills at GAM72054@AOL.com is the host. I'm not sure if the room is filled yet, but if it's filled, you still have an internet option at the same price. And if you have the internet option and you want to come into the room, as we get closer to the meeting, we'll know if there's any people that paid for the room but are going to be internet only. As I mentioned yesterday, great speakers, John Person, Dan Fitzpatrick, Chris White from EdgeRater, and Matt Caruso. You've got a professional money manager and John Person, author, owned the Futures Exchange, great indicators and multiple platforms that I bet you already have, such as Thinkorswim. Dan Fitzpatrick, who I've been following for, probably 15 or 20 years just because I like listening to his videos at night after I've done mine. Chris White, who came out of Microsoft. His company got acquired by Microsoft. He's a whiz, and he created this thing called EdgeRater, which is a tool that automates a lot of the things that I used to spend hours doing, saves time. It's just a great tool. He's got some great partnerships with like Kenneth Long. And then Matt Caruso, who had a massive outperformance in 2020 in the audited investment U.S. Investing Championship. He's got a great program that I also participate in, his Active Trader Pro program, and has had some great education. So I think this will be one of the best sets that we've had. Of course, nobody can make up for George Lee, who is one of the ones that started the program, but we pay homage to him every year and hope you can join us. My top-down trader is my Google group is called Top Down Trader. Just go to Google Groups, sign in with a Google ID, search for Top Down Trader. Let us know how you want to be notified, and you'll get into the group as well. It's free. I won't solicit you, and I will give you discounts on my tools if you join. Did you check your boxes? And I'm not talking about your inbox, your mailbox, your outbox, or your shoebox. I'm talking about Ian's boxes. So much of what I do is try and keep alive the things that Ian Woodward taught us over the last 20 years before we lost him. Disciple of William O'Neill with his own little twist and flair. Ian taught us so many things. Now, what about the boxes? Ian taught us that at major bottoms, you can divide stocks up into various boxes based upon their annual earnings rate and their quarterly earnings rate. That's the only parameters. Now I also limit the stocks that I consider by ERG, which is EPS rank plus relative strength rank plus group rank. So I'm finding some of the best stocks in the market at the time of the bottom, and they have good earnings. So if you've been to the program before, you know I love to talk about his boxes. I called the low on April 7, 2025 on YouTube. The low is in. Now, I still don't know if it's the final low, but it was a low, and the bottom is in. I then ran my boxes scan, and yes, this says report today because I'm looking at the performance, but you could see here on Monday, April 7th, I created 10 different boxes. I ran what's called the group performance analysis to see how did my boxes do. And you could see my favorite two, if you've ever been to the meeting, are box 1 and box 7. Box 1 are stocks that double every year. They're stocks that have a earnings per share growth on the annual and the quarterly of over 72% per year. Over 100% is an easier number to remember. My second favorite is turnaround stocks, box 7. These are stocks that have great annual earnings, current earnings, but they may have missed on a recent annual earnings, and they're a turnaround stock. So, what do we have here? In how many trading days between April 7th, probably 30 maybe, the box 1 stocks, we'll start here, box 7 stocks are up 29.22%. Box 1 stocks are up 27. Notice 89% and 88% gainers. If you look at the S&P 500, 16.35. So that's not quite double the performance of the S&P 500. And you could see if you took all the box stocks, all the box groups were positive. I usually have one here that's all the box stocks, which I don't have. But the reason why I run my boxes is because I want to find things that are breaking out and that are going to lead. When we're in Orange County, I'll go exactly how with an HGSI, where it's been made to make it easy for you, that you can create your own box list. Now, sometimes I think box stocks are always good because stocks with leading earnings should lead. Turns out they're not always good, and that often they've already run. But it's finding it when the market bottoms that these box stocks may really make a difference. Know your news and earnings. Wednesday we have a bunch of Fed speakers. Thursday we have Fed speakers including Fed Chairman Jerome Powell. We got through the CPI, kind of a non-event on Tuesday. On Thursday we have the PPI. Probably will also be a non-event because if it's high, we'll blame it on the tariffs that have been pulled back. And if it's low, we might be worried, but it might give the Fed some ammo to cut, which means the market will be happy anyway. So I'm not sure it'll be a big market moving. I'm going to be watching the Philadelphia Fed manufacturing survey, something I follow, the Philadelphia Diffusion Index. It was below 20. That's what worries people for a recession when it's minus 20 or below. Let's see if it got back up. You can see it went from minus 26. They're predicting minus 10. For earnings, C. I sold $150 calls, and it turned out stock closed today at 155. But the 150 calls were several dollars out of the money, and I collected some premium, so I'll lose my C at 150 unless the market pulls back in the next day or two. But I sold the calls because I wanted to reduce my pain to the downside. And so I talked about the last couple of days. That's why I brought it up. Big earnings tomorrow on Wednesday after hours. I think Cisco's a big one. CoreWeave's an IPO. I think this will be their first earnings as a public company. They're the ones that I think do Blackwell chips as a service. And then before the open on Thursday, we'll have Walmart. So there's still some really big earnings to go, although the season's starting to quiet down. Judgment call to hold stocks over earnings dates. It's bad judgment to not know when your earnings date is scheduled. On to the charts. All right, I'm using my Market MRI Pro tool. This is a tool that one of my followers, Praveen, built for us and offered it for sale in partnership with me. It comes with my stuff built in, and I'll show you what I can do with it. We'll start with a daily briefing. Now we feed this with real-time data, but we don't stream it because most of the people who I know that would want to look at this don't need to see this every second. But if you do and you hit the refresh, it takes about 3 seconds during the day to refresh. Up here we can see Bitcoin was up 3%, closed at the top of the range. The Qs 1.5%, and they were at the top of the range. And then you can see the things that did well, like the spiders and the Russell, 0.66, 0.37, not in the top of the range, came down to the middle. And the diamonds closed at the bottom of the range, and I think that was probably a lot related to United Healthcare. This is the company where one of their division CEOs was murdered in New York. They had the Change Healthcare disaster, certainly a disaster if you are somebody who does billing, delays in getting paid. And then they withdrew guidance and they traded down almost 18% at the close. Bounced a little bit after hours, but a huge move. This is a Dow component, so not a big shocker to see the Dow down. VIX was down a little bit, 0.67, actually at the high of its daily range. That's interesting. And then the dollar was down 0.86%. Updates real time, and we will soon be building in the feature to let you add your own ETFs there. I like to monitor during the day new highs, new lows, especially new highs minus new lows. The NYSE has been positive for a while. Unfortunately, in the 52-week, the NASDAQ actually flipped negative, which is interesting because, as I'll show you, most of the stocks, well, at least half the stocks in the NASDAQ were up today. Over here, we have the S&P 500 sectors, one-day change, technology, energy, discretionary, communications, where the leaders and the laggards were healthcare, staples, real estate. Another session where defensive sectors were underperforming. Okay, if we look at the themes that we're working, again, we've highlighted one-day change here. Clean tech, solar. We talked about First Solar yesterday. We talked about Solar Edge and Enphase, I think, over the weekend. Marijuana stocks, I usually ignore those because they're so volatile. Blockchain, semiconductors, oil producers, fintech, renewable energies, uranium, artificial intelligence, software. Boy, this feels like a different market where tech is back, discretionary is back, and high growth is back, which is great for that's what I like. Here we have 3 different indexes, and we look at assigning every stock in the index to a sector and industry group. Blue is today, gray is yesterday. You can see that about half the S&P 1500 sectors were up, and that's down from yesterday. 48% of the industry groups were up, down from yesterday, yet 55% of the stocks were up. NASDAQ a little bit stronger. We got 73% sectors up, although down from yesterday. Yesterday was such a great day. The NASDAQ 58% of industry groups were up, also down from yesterday. And then if you look at the NASDAQ, 52% of the stocks were up. And then the NYSE, you could see 64% of sectors down from yesterday, 55% of industry groups down from Monday, and 59% of the stocks were up. So that tells me, regardless of the indexes, more stocks are up, more industry groups are up. Not as strong as the day we saw Monday, which was just a crazy great day, wasn't it? But a bullish day nonetheless. Now, yesterday we looked at the buckets, and I was nervous because we had 32% of the stocks in the S&P 1500 were trading above their Bollinger Bands. And to me, that was a sign of short-term extension, and you really expect the market to, maybe to stumble a little bit, go sideways for a little bit before it goes higher. And you can see that the gray was yesterday, and stocks shifted from above the Bollinger Bands in all of these to the next couple of levels. So we took off some of the overbought. That's great. Less frothy is good. Yet the indices, at least the S&P 500 and the NASDAQ, went higher. And the Russell did too, just not as high as the NASDAQ. All right, and the NASDAQ has only 15% of stocks above their Bollinger Bands. This is a what I call a right shift, a very bullish looking appearance. When we look at market breadth, I want to make sure it's not too bullish. So we have a number of things here. Now the NYSE had a doji day after a big run up. Makes you wonder if if the NYSE needs to take a rest here. And even if it pulled back and retested the 200 and bounced, something like a retest here, that would be okay. So a sideways move, a drift down, I'm not sure that means anything's broken. This has been just a massive move from a low here of 16,820 to a high here of 19,711. So that's 2,900. It's less than a 20% move, but it's a pretty big move from low to high. If we look at the NASDAQ over here, a much different looking candle. Off the highs of the day, but a very bullish looking candle. Both of these have had massive recoveries. If we look at volume, hard to see, but it looks a little higher here, lower on the NASDAQ. If we look over here, we see stocks above the 20 in green, 50 in white, and 200 in red. The one that ran up, that big breath thrust on above the 20 is sort of leveling off. The 50 and 200 are still going higher. I mean, we're at levels where sometimes you see a market sell off or at least pause to refresh. So this will be the second indicator that says, a little pause here might not be a big surprise. Down here, we can look at new high, new lows, advanced declines, and up-down volume. And you could see everything's green except we were a little bit negative on the new high, new lows at 52 weeks on the NASDAQ. And down here, we're looking for symptoms of a big move, and what we have on the NASDAQ is another bango. The bango is the opposite of the really bad day, baby out with the bathwater. The bango is actually a signal that, boy, the market's buying everything. It's exuberance, and it can go on a little bit more, but when you start to see bangos, you know that the market's starting to get a little bit overbought. Overbought markets can get a lot more overbought than you think. The timing brief is just teasing me right now. If we look at the weekly, and you notice the bongo on top on the three, the Russell, the Spider, and the Qs is blue. The bongo flip-flopped on the diamonds and turned red again because we talked about last night the diamonds were barely had a buy signal. So interestingly, the Russell flipped to a buy signal. So we have 3 weekly buy signals. The weird thing is one of them is not the same as yesterday where the Dow was a buy. These don't count. Why don't they count? Because it's 8:51 on Tuesday night. It's not Friday at 4:15. If I still see a buy signal on 3 or 4 of these at Friday at 4:15, then my stance will get more bullish. Believe me, I'm bullish now. I actually used up some margin today. Not all my margin. I started to commit. Why? Because the buy signal's here. I am still concerned, as my little victory lap said, it may not be the bottom, but I'm participating. And it's been an amazing last couple of days. Hopefully you've participated. On the daily, takes a second to rerun. Come on, give it to me. You could see this massive move and a bullish looking candle on the Spider, and the Spider was up again in the markets on Tuesday. Bullish candle on the Qs, kind of doing nothing on the Russell after a big gap up on Monday. The only one that was down was the Dow. When I look at the US index ETFs, and I showed people this yesterday, so let me just show you again in case you didn't see. If you want to add the percent change close to close, it's an indicator. I know that's strange, but not everybody wants these on their chart. So you just double click on this CP to CC, and that'll put the closing price to closing price percent change. So when I touch the candle, I can see The spider was up 0.66. The Qs we know was the strongest, and the Q was up 1.52. The diamonds were down. They were down 0.63, it looks like. And the Russell were kind of a sideways move, and they were up 0.37. And then the VIX pulling back to where it started this run. And the dollar actually failed at the 50, which I thought was surprising considering the strength in the market. And you could see the dollar was down just a bit, 0.86. If I go and I look at commodities, good day in the markets, usually been good days for commodities. And you could see gold was up 0.43, silver, nice move up off the 50, was up 1%. Oil is threatening here, the 50, it was up 2.94. And as you could see here, natural gas came down some. It was down a little bit, down 0.87. And then both the 10-year up 0.90 and the 30-year up 1% had nice days in the market on Tuesday. So we've looked at the market. I've already suggested that I've gotten a little bit more bullish. I deployed a little bit more cash and actually entered margin for the first time in a while. I still have tight stops. I still have mixed trust of this market, but I've been playing in C and Palantir and Hood and Toast, and these have been some of the leaders, which is, it's given me a little bit of courage. But will be quick to take profits if this market seems to be stalling. And again, looking at the U.S. indexes, a pullback and a retest of the 200 is not necessarily a bad thing. Obviously, the Russell's got a ways to go. So let's look at the ratio charts. I already told you that what was leading, and this is discretionary here. Technology, you're looking for that white line at the end. You're looking for things pointing up here. So discretionary tech look great. Bitcoin had an up session, and these are ratio charts. So everything except for Bitcoin is an S&P 500 sector. And by looking at ratio charts, I'm looking at how it compares to the market, not just its overall performance. As the market's done well, defensive has done bad. So staples, utilities, real estate, and healthcare look very different than something like industrials, which is also strong, discretionary, or tech. Now, at heart, I'm a top-down trader, so I start with a list. And everything I'm showing you is standard in the program, and everything I've showed you so far are pre-built layouts that you get. I start with my impulse layout, and my JAS list is stocks in the NYSE, NASDAQ, and Amex greater than $1, greater than 100,000 shares. And today it's 36.28. When the market's bad, it will drop. Yesterday we talked about YPF, which is why it was sitting here. I do have a position there, and it traded down after I bought it and then moved up some. So it's up on the session. One that we've been loving is First Solar. And you can see what a great move, taking out the 200. Looking at the fundamentals, you could see next earnings are in July. And this is despite the fact it had, negative change on earnings and a negative surprise on earnings and revenue. But sometimes the babies are out with the bathwater and the market's ready to go higher. We also looked over the last couple of sessions at two other solar stocks. And Ian's Day, we used to call this a wolf pack when all the stocks in a group start to work together. Solar Edge looks like short-term it's peaked. Maybe it's heading to a retest. And then the other one was Enphase. Also failed. So First Solar here is the big one and continues to do well. So let's go into my top-down view. I've taken those, not personally, the program has taken those 3,600 stocks. It stuffed them into various sectors and industry groups. Typically, I'll look at what the leading industry group is and take a look at the top couple. I'm going to do it differently tonight. instead of looking at which industry group is leading and looking at the stocks and the leading, which sector is leading, and then look at the industry groups for the leading industry groups, let's do it backwards. Let's take the groups with the highest change on industry groups today. Hold on a sec. Got a little narrow there. There you go. So let's look at software, semis, software, oil, gas exploration, engineering, construction, travel services, hardware, industrial machinery, entertainment, and communications. One, two. Wow, I think I got 10 right off the bat. Imagine that. Now we notice there's 664 stocks. We're not looking at that many. Let's go here and let's filter these for $5, 500,000 shares. And let's only look at stocks that are now moving above the 200-day moving average. I'm down to 222. Let's just take a look at these real quickly. Some of the ones up at the top. We are ranked here. Let's got to rank on something. So hold on a second. Let's rank it on change today. So go up to the top. The big one on change today. We looked at this yesterday. KLAC. A nice breakout. It's just a super expensive stock. A continuation move there. MPWR looked great yesterday. And taken out to 200 today, but these are expensive semis. Netflix gave us a little buying opportunity maybe to get back in as it pulled back to the 17. And interestingly, there were people waiting to buy it. And notice here, the high jumps dropped down to 72. Netflix, I mean, it's an expensive stock. Certainly the leader of this run and why communications has been so strong. AppLovin gapped up after earnings, pulled back, and now it's moving higher. The last time it did this, it had a nice run up here. So I think AppLovin looks interesting there. ServiceNow, one of the big winners in the AI world. We're about to see the 17 cross above the 200. Again, these are unfortunately for most of us very expensive stock. MicroStrategy, given a little bit of a flag here after a run, very much tied to Bitcoin. MCore Group. So by doing this, except for the fact some of these are very expensive, look at this great breakout here at ASML. Look at relative strength and OBV. There are a lot of opportunities here on this list. Duolingo, this is a true leader. I missed this one. I was watching it down here, and I should have bought it. And the next day it had a big gap up, and that may have been earnings. So one thing I like to do is to go through the stocks like this. And again, I'm looking at the leading stocks and the leading industry groups. There are other things I could do with my little tool. I mean, Praveen did an amazing job. Go back to the impulse list. And let's add something to this. Let's look at pullbacks and uptrends, which is what I like to buy. And I've got 91. Let's now rank them by number of dots, which are my impulses. Let's see, VIV, a Brazilian telecommunications company, probably plays a dividend. A play on Latin America, a little dividend, not a big dividend. Okay, earnings are out 2 days ago, Monday. Now, one thing to point out, if you've not seen this product before, you hover over that and you get the fundamentals. You click on it, they stay. So if I hover, I can see them and take it away. I wanted news too. So not only do you have news here, let's say you want to read this. You click on that, it's going to open up and you can read it in a browser. And again, if you hover, you see it. If you click on it, it stays when you come away. And we're open to suggestions to improve some of the visualization. So VIV looks interesting. OPRX, Optimize RX. This is probably a PM based upon its PBM based upon its name, and I think the PBMs are at big risk from this White House. But nice breakout, run up, retest, and now it's running again. HNRG. Again, I'm not saying that these are good stocks or not, but they meet a certain criteria I have. These are stocks that have been in an uptrend, had a pullback with the last 9 bars. There's your pullback. That has a bunch of my impulse dots today showing a breakout. Hallador Energy, that looks very interesting. Did it have earnings today? It had earnings on the 12th. Let's look at those earnings. Um, Big change, big surprise, revenue change, revenue surprise. Not a big stock, and maybe too small at less than $1 billion market cap. But if you're looking for an exploration production company that's relatively cheap, that looks good. There you go, HNRG, GLPG, Galapagos. That's a biotech or specialty pharmacy stock. These are dangerous because they're news ridden and other things, and healthcare has been weak, and Trump and MFN are not good for pharma and biotech. But, here's a stock that has clearly been dropping for a while. Let's look at the weekly. All right, let's look at the monthly. So here's a stock, oy vey, as my grandmother would say. Not a pattern you want to be long on this red. And then it's been coming down for a long time. Um, and the question is, has something really changed here? I'd probably pass on this one because you've seen this before and nothing really happens. Grail, I would say it's a nice pattern. It looks like a breakout, but its earnings after hours were horrible. Elliott Edwards Life Sciences, pull back here, a little bit of a flag. This one might be getting interesting, really interesting. I could probably draw a line from the top of that and say, hey, you broke out of the flag today on a CPR, on volume, and a breakout. And so I could go down the list here to see things that I might like. VSTM I like, but they had a secondary. So some of them are existing shareholders selling, and they issued new shares. That's not always good, but let me tell you, if this stock gaps up in the morning, that probably is a sign to be interested in it, especially after the secondary is out. And then what else do we do? All right, another thing that I can do is, let's kill this scan, is I have these dropped out of built-in scans. So one of my favorite is volume over 500, price greater than 5. And let's look at 2-day momentum up. And we have, let's just look at these. ARWR below the 200, I'd probably pass. True Blue, pass. RWA, pass. I'm looking for Mr. Cooper. I think Mr. Cooper is a tire company, and then I thought maybe they make their money doing financing. But I think they're now considered a specialty finance company. Let's see what it says in here. Great earnings, year-over-year earnings, lots of surprises there. Earnings are out in April. Okay, I can live with that. Any news happen in the market today? Earnings call transcript, so nothing new on earnings. Not extended. I like this. It's clearly in a gradual uptrend. Pull back to the 50 and a breakout with relative strength in OBV. I like that one. This scan's really looking at this momentum signal down here above the yellow line and looking for 2 blue dots in a row. If you look backwards, 2 blue dots in a row and a nice run. You just don't see it very often. 2 blue dots in a row, and it ran. It just was a relatively flat run, but if you look at this straight line, it's definitely in an uptrend. Redfin, this was a favorite that ran up and came down. Looks interesting here. Again, I want to look at earnings, and earnings are not to August. They came out in May. It doesn't make money. I think this is in the residential housing sales. But, again, if I'm just a technical person, I had a breakout and momentum coming out of a squeeze, good relative strength in OBV, and a nice move up off of the 50. And if I go to the recent high, take the next high before today, did I just break out of a wedge? Well, this could be what some people call a wedge pop. Kind of looks like we broke out of a wedge to me. So Redfin will go perhaps to the top of my interest list. Now, when I trade stocks, and this is not financial advice, as somebody I was listening to tonight said on a webinar, if you want financial advice, go to a financial advisor. I like to buy them when they take out the high of the session. Why? Because what if this just trades right back and below the wedge tomorrow? I don't want to buy it at the open. I don't want to count on it coming back and then taking off. It takes off, I'm interested. If it doesn't take off, I'm not. I'm not. And if it chases away from my buy point, there's 13,000 other stocks that I could look at. MTUS, nah, nah. JD is a Chinese, I think, online retailer. It's interesting here. I'd have to see a breakout above the 50, something to watch. Civi, no, no. So, nice little uptrend bungee, pull back to the 50. A breakout above the 200 would be interesting. And this might be one I'll be putting on my watch list. One stock that I like is Mosaic, or I like, but it's had a big run, as you will see. And it started from down here when we first saw it. This was a big move day over here. Mosaic and Bungie are both in the fertilizer business. And then ACDC, yeah. So thinking of all the stocks that we saw today, I think Redfin looks very interesting. I feel that cheap Halloran or whatever it was called, that oil stock looks interesting, and I think First Solar is still a buy, and I think you could watch JD. Now First Solar's had a big move, just looks like it wants to go higher. Hope you like these videos. 30 minutes is way too long. I'll try and make it shorter next time. Have a great session in the market Wednesday, and I'll be watching for that reversal, but right now I'm surfing to the long side.